Good morning, everyone. Welcome to our Phillip Securities Research Morning Call. For today, we have a few stock counter updates, including initiations on AppLovin as well as TeleChoice, affiliate on the ground on Micron, and some updates on Soilbuild, Prime US REIT, as well as Geo Energy resources. We also have our usual technical analysis as coupled with the Singapore Weekly. So this is our usual disclaimer. The information provided is solely for educational purposes and should not be considered as financial advice. So I'll hand over time to Serena to get us started on AppLovin. Thanks.
Thank you, Zain. Good morning, everyone. Today I will be presenting our new US coverage, which is called AppLovin. The title that we gave is Scaling in-app advertising with data-driven precision. Next slide, please. Thank you. So a little bit of introduction for those who are not familiar with the company. AppLovin is actually an advertising technology company which IPO on April 2021. Compared to Meta and Google, we are more focusing on broad-based social media and search ad. AppLovin actually specializes in mobile advertising, particularly within the gaming sector. So this month, the company was also added to S&P 500 index. So there are actually four main services under AppLovin marketing solution tools. The first one is called App Discovery. It's actually a user acquisition and marketing platform for advertiser. This is the primary source of AppLovin advertising revenue. So how does it actually work? So under App Discovery, advertisers are actually allowed to set a return goal, such as installation, and also the target preference, such as location and also category for their marketing campaign. And then Exxon, which is an AppLovin AI-powered recommendation engine, will actually perform the algorithm in order to match the user who are likely to react to the ads. And next, we do have another services called Max, which is a mediation and also ad monetization platform. The main user for this platform are mostly mobile app developer. They're also be called as a publisher. They are the one who has the available advertising slot on their apps. So how does it work is that the interesting about Max is that it's running on the real-time auction basis rather than the traditional waterfall process in which each network is actually checked sequentially based on priority. So that when there is a multiple bidding for an ad slot from different ad network, Max actually will be able to select the highest bidder in order to win the ad space in order to maximize the value of ad slot. And third, we have Adjust, which is a mobile measurement and analytical platform. So through Adjust, advertiser could actually choose to pay a subscription fee, and AppLovin will then actually provide attribution data and also in-depth report, so that advertiser can actually have more insight about their marketing campaign. Lastly, we have AppLovin CTV business is called Vero. It's currently distribute streaming video for content company and provide advertising solution to maximize the ad revenue and also grow CTV viewership. But CTV is currently not AppLovin business priority. Next slide, please. Thank you. So how does AppLovin actually generate revenue through this offering? There are actually three components. The first one is through Max, which is focusing on ad monetization. So let's say that if there is an ad slot successfully being sold via Max, AppLovin will actually take a cut as a mediator, and after that will pay publisher the rest. And also there are actually some other ad tech company which solely focus on demand side platform, so that they don't really have an ad inventory. Therefore, they will use Max in order to bid for the ad slot. With that, AppLovin will actually charge a 5% tax for any impression, which refers to ad slot bought via the platform. Secondly, AppLovin also generate revenue through app discovery, and since the company actually focus on performance-based marketing, advertiser will only have to pay for measurable outcomes such as install, purchase, and engagement. So this is why when they place the marketing campaign, they need to set a certain return goals. And lastly, AppLovin also earn a small portion of revenue from Adjust software as a service subscription. And for AppLovin, our investment thesis, the first one is actually we think that AppLovin actually hold a strong position in performance-driven mobile gaming advertising. They focus on measurable outcome like in-store and also subscription rather than the brand awareness, which is what Meta do mostly. We think that the end-to-end marketing tool actually support both advertiser and also publisher, and the way that they run the ad exchange actually will be able to capture the value from both developer and competitors. Like I say, the competitors will use their platform in order to have a ad slot, and then they will charge based on that. And then with the control over monetization, also distribution pipeline, and also they will continue to grow the max mediation platform. We think that AppLovin will be able to continue to scale the ad supply and also the revenue. And in October this year, AppLovin will actually launch the self-serve ad platform. And in the second quarter, their revenue actually up 77% year-on-year to 1.26 billion. And then we currently project a revenue growth of 55% for financial year 2025. Because of moving forward, they will have a global expansion and also the Gen AI integration. They will be helpful for further enhancement in terms of the ad targeting. And secondly, we do see they have niche and growing market opportunity. So we think that AppLovin is very well positioned to capture the significant upside from the mobile app advertising market, including gaming as well as the emerging channel like CTV. Moving forward, they will actually expand the vertical to e-commerce, so that it will directly expand the total addressable market. And according to researcher and also marketing agency, the in-app advertising market actually now project to grow over 8% compounding annual growth between 2025 to 2030, reaching $580 billion. So it will actually provide a pool of ad inventory and user engagement. The company can actually monetize through the AI-powered platform. Next slide, please. So how did they actually perform in 2024? In financial year 2024, the company actually managed to generate the revenue of 4.7 billion, which grew 43% year-on-year. If you look at the graph on the left, around 68% of the revenue actually coming from advertising, and the rest actually came from ad business segment. But the company actually sold the ad business segment in order to focus on advertising in June this year. So moving forward, you see that the revenue actually purely based on the ad business. And also besides the strong revenue growth, AppLovin actually be able to generate a very strong cash flow from core operation. Their free cash flow actually reached 2.1 billion in financial year 2024. And the management mentioned that this cash flow actually will be prioritized for share buyback instead of acquisition at the moment. Next slide, please. Thanks. In terms of the balance sheet, beside the cash flow, a strong cash flow that I mentioned, AppLovin actually has a non-current liability increased by 18% because they do have a higher long-term debt. This is primarily in the form of a senior unsecured note, which will mature between 2029 to 2035. They do have an annual interest rate ranging between 1.5% to almost 6%. Yeah. And then as an advertising technology company, AppLovin definitely face competition from company such as other ad tech companies such as Unity and also bigger player like Google AdMob. But even Unity is actually a significant player for the game engine. Its advertising business actually remains weaker compared to AppLovin in terms of the size and profitability. The company currently still suffer net loss in the second quarter, and they have a negative revenue growth rate, while AppLovin actually grew 77% year-on-year. And the company also managed to deliver a 76% operating margin compared to Unity 26%. We think that is an indicator that AppLovin actually has some more operational efficiency. And for Google AdMob, the platform is actually popular among smaller developers because it will be better to integrate with the operation system Android. But AppMode is actually focused on leveraging Google diversified source of revenue, and it's running on the waterfall process, so that we think that AppLovin's max real-time bidding to combine external network with the advertisers' demand will actually provide the developer more control and often lead to a better monetization of ad slot. We think that this feature actually will provide the edge to push their advertising business. As for the risk, AppLovin is actually highly dependent on Apple iOS and also Google Android ecosystem for the advertising business, because the majority of the advertising inventory and also user reach actually are through mobile app, and these apps are actually distributed via App Store and also Google Play. We think that this reliance actually expose the company to a certain level of platform risk, so that for any changes of the policy such as Apple Reason app tracking transparency, which actually ask approval from users to track the user activity, will actually might actually hurt AppLovin in terms of doing the precise ad targeting, because they have fewer third-party data. But despite the risk, we actually are positive about AppLovin ad business, because the first one is that Max has a SDK integration, which will allow AppLovin to continue having first-party data access. And the secondly is that the improvement on Axon will continue to optimize the ad targeting capability even with a fewer personal data. I'll take a step back to explain what is the SDK thing. So it's actually short-term from software development kits. So how it works is that game and app developer actually will integrate Max SDK into their mobile app in order to monetize the slot. So once the consumer actually downloads the app, the SDK will actually notify AppLovin of an ad availability. And then with this SDK integration, AppLovin will actually have access to user activity, which could be utilized for better ad targeting. So this is our considered as a first-party data. Yeah. Okay. And then the secondly is that AppLovin actually also face an intense competition from major digital advertising players such as Meta and Google. But like I said before, Meta and Google, they are more focusing on broad-based social media ad and also search ad, and they also focus a lot on brand awareness. But AppLovin specializes in mobile gaming advertising and also focus on performance-based marketing. We think that this positioning actually differentiates itself from this player. Next slide, please. Thanks. So moving forward, the company actually guided a revenue of 1.32 billion to 1.34 billion, with a target adjusted EBITDA margin of 81%. So for AppLovin, we actually have a accumulated rating of the DCF target price is $725, which implies a more than 8% upside from the current share price. That's all from me about AppLovin. I'll pass the time to Iqbal. Thanks very much.
Thanks, Serena. I'll be presenting on Micron's Phillip on the ground. Yeah, next slide, please. Micron released their fourth quarter results last week. For those who are not very familiar, Micron produces high-end HBM memory chips for data centers, and also DRAM and NAND memory chips for PC, mobile, and auto segments. For their most recent quarter, their revenue is up 46% year-on-year. This beat their guidance, and this is being driven by record data center revenue because of the strong HBM demand and also growth from the mobile and PC segments. So as you can see in the bottommost table, so the cloud memory segments represents the HBM chips segment. So the HBM chip will be sold to cloud players, and this in this segment itself, the revenue actually up 214% year-on-year. Yep. So for Micron's gross margins wise, it is up 10 percentage point year-on-year because of higher HBM sales mix and also better pricing in DRAM. For their products wise, for HBM3E, which is currently integrated into AMD's MI355 GPU rack as well as NVIDIA's Blackwell GPU rack, it is currently undergoing the ramp. RAM itself. And they also secured pricing agreements with almost all customers for their existing supply in next year itself. For HBM4, which is the next generation, they have sent out samples to their customers, and they are in active discussions on the specs and volumes for HBM4. Currently, they boast the highest bandwidth to be achievable to be 2.8 terabyte per second. Their competitor SK Hynix mentioned in the previous quarter that their HBM4 chip can reach more than 2 terabyte per second. So I think currently both of their HBM4 chips are industry leading, and we do have to see how this plays out. But currently demand for high-end chips still far outstrip the supply. So both should be able to benefit from this demand supply dynamics. The guidance for from Micron's management is that they expect PC shipments to grow about mid-single digit percentage in towards the end of this year itself. Previously, their guidance was low single digit percentage growth because they do see increasing drivers from Windows 10 end of life, as well as greater adoption of AI PCs. And they also expect low DRAM supply, higher HBM and DRAM bit shipments, as well as better pricing to drive revenue growth and margins expansion. Our outlook for Micron is that we do think that the higher capex from hyperscalers will drive demand for their memory products because their memory chips are being integrated in NVIDIA's and AMD's GPU racks. And we also do have a more optimistic outlook for PC sales. As mentioned, because of the Windows 10 end of life and the greater adoption of AI PCs, because enterprises will switch out their very old computers to new computers with higher memory. For example, those with 12 gig DRAM at least, in order to run the AI models. Yeah, so we do think that this will benefit AMD and Intel's PC CPU segment. Yeah. Next slide, please. That's all for Micron. Yeah, I'll also be touching on Soilbuild's update. We released an update report this morning. Next slide. Yeah, so for Soilbuild Construction, we do see some key industry catalysts going forward. Firstly, the government announced 10% higher number of HDB BTO flats to be built from 2025 to 2027 as compared to earlier announced. So as you can see in the chart, in the top chart itself, they announced that 55,000 HDB BTO flats will be built in the next 3 years. Previously, the announced figure was 50,000. Yeah, so this is a 10% increase. And if you can look at the 20-year average, that is the average annual BTO flats being completed. So that is about 15,000. And over the next 3 years, we do think that on average, there will be a 22% higher than average number of BTO flats being completed. Yeah, so this is positive for Soilbuild's precast segment, which I will touch on very soon. The other favorable industry catalyst is that the trailing 12 months private contracts awarded has increased 62% year on year in the recent July data. So this is also positive for Soilbuild because this shows that there's a higher number of projects being tendered out, and Soilbuild being very focused on the private sector will stand to benefit from this increasing demand. Another key highlight for Soilbuild is we do see further growth upside potential in the precast segment. Their first half 2025 precast segment revenue increased by 77% year on year, and their precast operating margins increased by 4.5 percentage points year on year. And this is being driven by strong industry demand for their precast components. Yeah, so as mentioned earlier, because of this higher expectation for the number of completed BTO flats, we do think that Soilbuild's precast components will experience very strong demand, because for the newer HDB BTO flats itself, they are purely being built from precast components. For example, the walls of the BTO flats, the ceilings and the floors, they are being made by 2D components, which Soilbuild specializes in. So we do think that this kind of favorable industry trends will definitely benefit Soilbuild. Our outlook for Soilbuild is that based on its strong track records of winning tenders, we do think that Soilbuild can continue to secure additional contracts in the private sector in the fourth quarter itself. And we do expect FY25 precast operating margins to increase by 2 percentage points year on year to 10.9%. As you can see in the chart, the bottom chart itself, Soilbuild's precast margins turned positive in FY24. Yeah, so we do think that this positive trend can continue for the next 2 years. Yeah, so the precast margins is being shown by the red color line. So you can see that it turned from negative to positive in FY24. Yeah, because this is driven by operational and scale efficiencies. As they take on more PTO orders, they are able to allocate their resources more efficiently and reduce their costs. So for Soilbuild, our call is that we maintain buy and we raise our target price to 3.41. Previously, it was 2.68. This is because we raised our valuation multiple to 7.5 times FY26 PE. Previously, our multiple for them is 5.9 times. This is so as to be more in line with its peers average. Yeah, so that's all for Soilbuild. I will hand over the time now to Zane. Thanks.
Thanks, Ivan. Good morning, everyone. I'll move on to the technicals. So first up, looking at S&P 500 last week, we saw at the start of last Monday, there was a bit of pullback from the short-term trendline resistance. And then price did a retest on Thursday to retest the upward support line, this blue color line. There is a key support level holding since start of July. And then we saw a bit of a rebound on Friday. So I think for this week, I think we're likely to see some sort of a bit of a sideways consolidation going ahead. With the current resistance likely to be at 6,650 to 6,700 area, which is the current 5 to 10 day moving average level as well as the swing high last week. And as for support, it's likely to be at 6,570 to 6,625 area, which is the swing low on last Thursday, as well as the current hour support line level. So that's all from me. I have time to Paul to give an update on prime US REIT. Thanks.
Yeah, thanks. Thanks, Zane. So Darren is on leave. Myanmar is also on leave. So let me just run through the highlights of his update report, raising capital to fund growth. Next slide. So Prime last week announced that they did a private placement of 129 million units, roughly around 10% of the market, about of the market share or the number of shares, sorry, about 19.35 cents. This is to fund growth and to increase occupancy, but mainly is also to lower their gearing below the current 46%. The other thing they're going to use the money is that with the stronger financials, they are going to raise their payout ratio from, I think, 10% to at least 50% from second half onwards. So for in terms of his view, I think we like this deal because it will strengthen the gearing, raise dividends, and also the whole US market, office market recovery is still on track. So according to JL, the leasing requirements has grown and is the highest since fourth quarter 21. Work from home is recovering to 3.8 days, I think from 2.8 days in the past. And of course, supply is also still low. It's like 80% below 2018. So virtually no supply. The chart on the right, what he's just trying to say is that although this comes from the company, but anyway, although occupancy is 80%, the actual revenue that we see right now in the results is only 70%. Because theirs is like committed occupancy. It will take time to get the letter intent, and then there'll be some usually rent-free period. So there's another 10 percentage points of growth coming up, at least from the revenue side, which is firm and committed. Just that it takes time because there's usually rent-free. And I think by year end, they're looking about 85% committed occupancy from the current 80%. So he maintains the buy. He's raising his target price. The payout, the stock is trading at 0.4 times price to book. The payout ratio will rise from in the second half. So I think based on his estimates, I think dividends will double the next will triple, actually will double this year and then double again in 26. So that's why the dividend yield will jump from 3 to around 6%. Next slide. I'll move on to Geo Energy. So we gave an update that the infrastructure, so far the infrastructure build-out has been within schedule and should be completed by middle of next year. Next slide. So in terms of the key high points is that the infrastructure is 30% fully completed and on schedule. So this 92-kilometer road and jetty, which is worth probably 190 million, because the budget was raised to by 40 million. So this whole thing cost almost 200 million US to build. Some of the share price catalysts, even before the road is completed, there's a chance for them to monetize. They could sell maybe a 10 or 15% stake, I'm not sure, but they could kind of sell it and just at least crystallize the value and also kind of help deleverage. Just to reflect the underlying valuation of this whole infrastructure. Once the road is completed, there will be a spike in coal production from one of the mines. It's called TRA. So they have 4 operating mines. This is I think the third smallest one. So the production there is about 2 million this year. It will slowly creep up to 4 million. Because although the road is completed in middle of 26, you need at least 1 to 2 months for actual commissioning. Then the full impact will be in 27, and then the road will be up. The production should jump to 6 times higher, about 12 million. The reason why it's so much higher is because the road will be 50 million metric ton capacity road. Then it will slowly creep up to their 25. So the balance 25, they'll use it as a toll revenue. They will kind of other mining companies in the area will also take they can rent it out between $6 to $8 per metric ton, depending on the coal price. The final point is that the coal price is starting to stabilize after the peak in November 23 has been on a downtrend. So the mine supply conditions seem to be improving. There is a contraction in production, partly because of the involution policy that's happening in China. There's a tighter inspection and penalties in order to enforce the coal production limits that have been given to all the coal mines. As a result of that, we are actually lowering our discount. So we give like a 70% discount to the coal and toll assets. We're just narrowing it now to 60. Our target price is raised to 59 cents, buy, maintain, and no change in our target price. So in conclusion, once the toll road is completed, there will be a jump, like mentioned, in production for one of the mines, which is using an older and other companies' toll road. They will get toll revenue from the additional 25 million capacity, and there will be a river transshipment fee, like we highlighted. They just 2 weeks ago or 3 weeks ago, they acquired a tank and barge business. So they can also secure fees from that, but that is pending acquisition. And the fourth driver will be some asset monetization. So ideally, before they actually get it on, they can sell a stake just to reflect the underlying value of these assets. And of course, it can help to de-gear too. Next slide. Okay, let me move on to there's 2 more slides. This is the coal price. It's been on a decline. We're starting to see some stability. Hopefully it kind of sustains. In the then on the right is basically China coal production. The green line is 2025. So the green line, you can see that it's higher than the past 3 years. So it's but right now it's starting to drop and starting to contract. So this will be positive for coal prices if production slows in China. Next slide. Move on to our initiation, TeleChoice. Yeah, it's a very small company. Also not much. The bid ask is quite wide, but I knew there's a reason why we kind of initiate. Yeah. So for us, the title of our company is called A New Trajectory. So this company has been around. I mean, it's been around since 2004. So listed almost 20 years. The key thing to note here is that they are owned 50% by ST Telemedia, basically owned by Temasek. So ST Telemedia is one of the largest data center operators in this region. They have 3 core business, roughly. The main one is, you can see 70% of profit right now comes from mobile. Just think of it like mobile distribution. And then ICT, which is system integration. Then network engineering is basically you do networking to install 5G, outdoor 5G, indoor mobile network. But I think the key thing now is they're moving to data center. So in terms of the three key drivers for the share price. Firstly, is that they secured a 500 million contract from Malaysia mobile operator U Mobile last year, early last year. So this contract helped them swing from a 10 million loss to a profit of 6 million if you use the trailing 12 months. So this will continue at least for the next 3 years. Then also turning around, not so much the ICT, that's still small. But they are probably collapsing some of the headcounts and then focusing more on high margin. The network engineering, which is installation of mobile networks in Indonesia, they doubled the headcount to 4,000. And they are focusing more on data center power solutions. So they've been starting to do that. And with ST Telemedia, that should help give them more contracts. And the valuations, there isn't many peers to compare, but if you just peg it to 15 times, so that's how we get the share price, target price. So we use 15 times, there's hardly any, though. We'll have a table later. So we expect stable earnings growth, as the 4 PL will give them that base load, probably mid to high single digit kind of growth. Because what's happened, and also I'll show you the next slide. Sorry to kind of fumble here, but then the key thing here to watch is the ST Telemedia ownership. But that is important. So this will give them an advantage for future growth opportunities. Next slide. So in terms of the PCS, just to dial back again on the respective divisions, the main thing, because they are distribution, their brand marketing, the key one is this 4 PL that they did. So 4 PL is like do more than 3 PL. I mean, 3 PL, you know, is just you warehouse products, you deliver, you do after sales. But 4 PL involves acquiring, taking on the handsets on your balance sheet. So you're taking on inventory, but of course you get paid for all this. There's financing. You decide which devices, you decide how much to buy. And of course, this also links them to U Mobile very closely because you get a lot of data from U Mobile or what's their forecast and so forth. So the growth driver for this is that U Mobile secured their 5G infrastructure in 5G license in November last year. So they are ramping up. You get the growth in subscribers, which means more handsets. They are expanding branches. And there's this subtle shift from prepaid in Malaysia to postpaid. So this will require higher price handsets and so forth. In terms of the ICT probably will be very slow, I think, because they can't really differentiate themselves much. It's highly competitive, but the growth there will come from AI and cloud solutions. Network engineering, they are doing more installation work, 5G installation because of U Mobile in Malaysia, and also more coverage in, sorry, the typo here is Indonesia, not a new country here, Indonesia. Yeah, and also they are ramping up headcount in Indonesia because they're starting to do more data center jobs. Next slide. So this is just a comparison to a proxy to the peers. There is no direct comparable. The closest we think is probably Neratel, but Nera is loss making. So we use CSE because CSE is a system integrator. We kind of use Infotech. They are more like a SaaS company. So these are some of the comparables that we have. Next slide. I'll move on to our weekly. So for weekly, okay, there's a lot of blank space, but basically there isn't really much kind of major macro news. But anyway, in Singapore, we have some industrial production numbers. It's pretty weak actually. It's about down 8%. So a lot of it was down to the weak pharmaceutical. But something to monitor. We're not sure because there was so much front loading, then manufacturing activity was slow. It's just one data point, but we're not. We need to follow up with the subsequent months. The big number was, of course, inflation, which the Fed monitors, the PCE. So this is gradually still rising by the gradual pace, highest in 6 months, but it is still below the Fed's forecast. As you know, every quarter the Fed will have some forecast, so it's still below their December forecast of 3.1. Next slide. I'll move on to our tactical view. So for us, we think the macro environment it has become more positive for equities. So you might have heard this word stagflation, which is everybody talks about it. Every newspaper used to talk about it. So basically, stagflation is the worst of both worlds. So you get low growth and you get high inflation. It's the worst of everything. We think this can reverse. I think you probably get one pop in inflation because of the tariffs, but our view or our prognosis is that you probably can't pass on this inflation to wages because the job market in the US is poor. So as jobs contract, the wage growth won't be there, and it's actually disinflating. We'll show a chart later. And also, when you have slower growth in wages and also the GDP is holding up, you basically can get a productivity boom, which is the most ideal for the market. And this is especially with AI being rolled out. So for us, we think AI is probably just an excuse to cut headcount. But again, you get the productivity boom. It's not a positive thing, but you get a productivity benefit. We also see other disinflationary forces from wages, and also rents are also coming down. So it's a non-consensus view that actually after this rise in inflation from tariffs, that inflation could actually be trending down. So that's our view. The US growth is still doing well. The GDP, second quarter GDP that was announced nominal was 6%, although partly because lower imports, so it's a bit of a anomaly there. But if you look at the so-called Atlanta GDP now numbers, which kind of monitors GDP for third quarter, it is still growing about 3%, so still very healthy growth. Other indicators we look at, like PMIs, corporate capex spending in the US, retail sales, household wealth in the US is still climbing, like because the stock market is up like 6% to 176 trillion. And even though the government is collecting more in tariffs, they are still injecting a lot of deficit into the economy, injecting a lot of growth. So they're still running a 2 trillion deficit by the US government, even though they're collecting all these tariffs. So all this we still pan up to a strong US economy in the third quarter. So having said all these things, so what does it actually mean? So from a macro perspective, we think it will lead to a stronger US dollar, partly because other countries too cannot have a strong currency. China's data is soft, so although all the AI is pushing a few stocks, but the Chinese data macro conditions is weak, mainly because consumers are not spending. I think household savings is three times higher than what they're doing now. More than 2018. So they are saving almost 2 trillion a year additional. And of course, Europe also can't afford growth. I think the France credit rating just got downgraded, and they are probably going to an austerity drive to lower their government spending from the 5.8 to below the EU's target of 3%. Yeah, so that's our prognosis of our macro view, of course, of the US dollar. So in terms of the events, so the main one will be payroll. So there'll be the much watched number will be payrolls on the 30th October, which is basically tomorrow. Yeah. Oh, sorry, 3rd October, sorry, not 30th. Yeah, my mistake, sorry, not 30th September. These are some of the events. So on the 2nd of October, we will have NTT DC REIT, the one that just got listed. So sorry, apart from Centurion, feel free to dial in, it's open to anyone. And then on Saturday, we have our usual quarterly strategy. Yeah, thanks. Next slide. So this is just some illustration. The red line is still tracking sideways, although the core ones is moving up because core PCE, which the Fed uses, is a bit more broad-based. So that's tracking sideways, even as we head into 2026, which is the shaded area. Inflation is there are disinflationary forces. That means inflation is coming down for wages, coming down for rent. So this we think will help keep inflation in check. That means there is no transmission. That means even though the tariffs will raise price, but it won't lead to wages climbing because the payroll market, the jobs market is weak. I mean, this is just our prognosis, probably a bit non-consensus. Next slide. The US growth is still resilient. So this one, the blue line is just a quarter-on-quarter. It tracks the GDP pretty well. So it will tell you what's happening right now. I mean, this is a weekly number. So yeah, so it's still growing about 3%. The one big surprise in the US economy is probably the corporates are spending. We track all kinds of indicators. We have the durable goods. We have capital goods imports. I mean, what type of equipment the US imports is also growing. Although it's slower right now, but it's still at, 13-14% growth. Likewise for tech imports. So these are some of the machinery like semiconductor equipment. I think a lot of this probably related to data centers. So that's still growing about almost 30% imports. Next. Okay, so thanks everyone. So we can move on to Serena, are you taking on?
Let me take one question first. Yeah, then Serena, I'll pass the rest to you after that. I think quite a few on the AppLovin. Here is a question from Ian asking any thoughts on outlook on Singapore banks and any new revised TP, especially after the recent substantial pullbacks. Yeah, so our TP, no, we are still keeping our TPs for now. It's honestly speaking, the OCBC and UOB's TP were were pretty we were in a neutral already, so I think not much change needs like it's roughly around what we were expecting. DBS did pull back a bit, I think because of that really from that report that JP Morgan sent out. I think a lot of the investors were taking quite a bit of profit. But we still, the main outlook has not changed, right? Even though the rate cut came in, we've really seen, like multiple, you just think of like multiple rate cuts in the Singapore interest rates, right? That has really been impacted for the past almost half a year, almost to a year already, right? So we've already seen that, and the banks have managed to sort of um, combat that, by cutting their current account rates, by cutting fixed deposit rates, and also by increasing or trying to increase at least their deposits, right? So that's how they balance their funding costs. And on the flip side, with lower rates, the positive would be that loans have been growing steadily, right? We have seen Singapore loans grow, 6+% in the most recent month that we had the data for. And also fee income has been continuing to grow, with the exception, of course, of I think UOB, there was an exception because I think their customers are a lot more prudent. So they are just having this wait and see approach. So they just put it back into fixed deposit, which is why we see UOB's fee income actually take a hit or maybe not improve as much as their peers. So the outlook is still similar, right? We expect that NIM compression will continue going into the rest of the year and even into next year as well. But then the banks will be able to, offset some of this with continuing to lower their funding costs by lowering current account rates and also fixed deposit rates. And by taking in more deposits, from the influx of inflows that are coming into Singapore. So that's what they're doing now. Yeah. Hold on, let me find that question again. Yeah, so that's just the one thing, the outlook for the banks that would actually be something different would be the dividends. DBS, the reason why I guess they have performed better than the rest is because they are more proactive, or they're more open with giving a guidance on the dividends, right? And they also give a fixed dividend as compared to the other two who don't really give as much information on where they're going to go with dividends in the next year or the year after. And also it's a floating dividend, so dividend policy. So it really depends on the earnings. So I think that's the main difference between the three banks now. Yeah, there's one more here, sorry, on GE. Yeah, the outlook on GE, and we don't have a TP on GE. So someone's asking thoughts on outlook and TP on GE. Good to accumulate, though their daily volumes look low. Yeah, I think that's been the case even before they started trading again. Even before that, the volumes are always low. So for GE, it's very dependent, on where does OCBC want to take them, right? Sorry, we can't provide a target price because we don't cover GE. But I think especially now after that, they failed to privatize GE and to put it fully into their group, right? It might be a bit hard for them to push to where they want to, in terms of the strategy that they want GE to have. I think they already had something in mind, in terms of plan A was to privatize it, and then fully envelop it into the OCBC group, but now that they moved it away, then it could be a bit hard. Yeah. Yeah. Yeah, okay, this is a good question here. Why Singapore bank share price dropping but US bank share price rising with the interest rate cut? Yeah, so the banks work slightly differently in terms of when you talk about US and Singapore banks. So the US banks, I spoke a lot about the Singapore banks, and they are hit quite hard by the decline in interest rates in terms of their NIMs, right? So you see the NIMs continuously drop, and it's really because they depend a lot on the loan yields, and deposit cost in Singapore is historically is pretty low if you compare it to the US, right? And it's because there's only three banks, and they don't really have to fight with each other or with many other competitors. So a lot they just sit there and do nothing. Basically, they get a lot of deposits. Whereas in the US, there are so many banks, right? So a lot of them have to fight for deposits. So the way that they do that would be to give more attractive deposit rates, interest rates, right? Which is why that's the only way that they have to get deposits, right? To increase their deposits, and that's the base for any bank. So now what the US banks have been hit with is that the interest rates have remained high, right? But the loan yields have stopped growing, like it was, maybe 1 year ago when that was the good times for the banks, right? The loan yields have stopped growing, but in order to continue growing the deposit base, they have to keep increasing their deposit interest rates, which is their funding costs or their cost of funds, right? And they keep doing that, so it keeps eating into that NIM, into that margins that they have, right? So that's why we see the NIM compression coming in for the US banks, although rates haven't been cut, right? Only that September, the 25 basis points cut. But we see that NIM compression coming in because of this need to gather more deposits and to attract more customers, which is why they have to increase their deposit rates, which is their cost of funds. And now with this rate cut coming in, right, the banks can finally have a reason to everyone, say like, okay, we can all lower the interest rates, lower my cost of funds, and then the NIM can finally pick back up, which is why it's a bit more positive for the US banks. Yeah, hold on, let me just see. I think okay, there's one more on Tesla as well. Someone's asking, what's your expectations for Tesla's upcoming deliveries? Yeah, we do have the August numbers. But I mean, the August numbers are not the official numbers. The China numbers are official, but the next one will be the official third quarter delivery numbers by Tesla themselves. So then we'll be able to see a consolidated view of how well or how badly their deliveries did, right? So based on the figures that we have seen so far, it's not good news for Tesla, right? We would expect that there will be a spike in the US sales, right? Because of the EV tax credit falling off in end September. But then again, it's more like the opposite, where the whole market grows, but Tesla is actually losing out because all the customers are just, if they want to buy a new EV, they will not look to Tesla. They'll look more to like Hyundai, right? Ford, right? And all these other US car companies which are coming up with new like fancy, more gadgets kind of EVs. So I don't think it'll be very positive. It could decline, I guess, year on year. It will not be as severe as it was the previous few quarters where they released their quarterly delivery numbers. So I'm looking, my best estimate, right, based on what we have seen so far, it would be around mid to high single digit year on year decline for third quarter, right, based on what we have seen so far. Yeah, but again, they could always surprise, and it could be even worse than that. Yeah. Because they haven't really come up with any new inventions or new models, right? Everything is just the same, they just put a little bit, here, put a bit there, and then they call it the upgraded Model Y, and then they try to sell it off to customers. Yeah, okay, one of the questions here is of all the US big cap banks which have surged after the Fed rate cut, is it too late to accumulate, or which one to accumulate? Yeah, I would say for the banks now, for the US banks, we're still looking at JP Morgan, right? They are the biggest. They're able to they have their arms in almost every segment of the financial sector in the US, and not just in the US but also globally, right? So if they are able to garner more deposits as well, so something like what DBS is doing, where where if you want to put your money into a US bank and you want the most stable one, you put it into JP Morgan. So that's one of the positives. They also have a global presence. So if anything happens in the US, they are slightly more shielded, in terms where they're more diversified. And also they have a very big wealth management team as well. So it's a bit more diversified, especially now when it's slightly more volatile. So I would say JP Morgan is still the one to look at. Yeah, okay. I think one last one for me before I hand it over to the rest. Hi Glenn, is the overall outlook for Singapore financial sector good for Q4 2025 into 2026? Yeah, I wouldn't say it's not. If you would do it, if you compare to last year, it's definitely not as good, right? The banks are all trying to, last year where they were really just sitting there, and then you can just see that their earnings just spike up, right? And then now it's more like they have to do a lot of work to try to keep that earnings or the PATMI even maintain level at the same amount. So it's a bit more I would say I'm a bit more neutral on the Singapore financial sector going into the fourth quarter and especially in 2026 because of how the interest rates are going and how we are seeing the interest rates going, and also the fact that they are able to try to combat some of these, right, with lowering funding costs and also improving loans growth and fee income growth, and that's a way to make their earnings flat. The good thing that we can see from the Singapore financial sector, at least the banks, would be the dividends, right? They have hoarded such a huge sum of capital for many years, right? That now they'll give back. And now, since the earnings are not growing, there's the one way that they can look to give back more, which is by using some of that capital, the excess capital that they have, to give back in terms of dividends or share buybacks. So that's one of the main positives you can take away from the Singapore banks going into the rest of this year and also into next year. Yeah. Oh, actually, yeah, there's one more that came in. So do you access that banks would fare well in the future environment with the optimistic outlook this morning? What about local banks? Yeah, so the future environment, yeah, like what I said, I think just summarize what you said. You said essentially it's a bit more volatile for them because of where the interest rates are going, so they will do a lot more work, right, to try to maintain profits. But I think the main positive would be that they have a lot of provisions set aside, right? So they are well buffered for any kind of NPLs or NPAs, and also that they are giving back to the shareholders. Yeah. Okay, let me hand it back to the rest of my colleagues. Thanks.
I will answer the questions about AppLovin. Second. The question keep jumping. Oh, okay. Yeah, I can see that there is a question about what are the key metrics that investors should watch to gauge AppLovin health and trajectory. I mean, according to their earning costs, most likely the fundamental definitely is about their revenue growth and also the margin. They're expecting around 81 to 85%. But at the same time, I'm actually also looking at the average revenue per monthly active payer, and which is currently grow around 10%. So this one you should be able to see that if the advertiser are actually spending more money on AppLovin, and then instead of looking at the daily user growth, that I would prefer to see, because if essentially this is advertising business, they still need the spending in order to push the revenue. And then the second question will be, what growth expectation are baked into the current stock price? Currently, there are two major things. Is that the first one is that in October, they will launch a self-ad creation, so that the ad creation can be more efficient for more precise targeting, so that they hope that it can actually shorten the conversion period. And the second thing is they do will have a global expansion in the e-commerce vertical next year, so that I think this is why that the current share price are optimistic about these two areas. And then the third one will be, how sustainable is their business model with reliance on ad revenue with so much competition? Like I say in my presentation, I think is their positioning on the performance-based mobile ad advertising that specialize in gaming. I mean, it's not like the advertiser actually will swap between different platforms. It's not like when they started to spend money on AppLovin, they decided not to place an ad on Meta and Google, because all of these digital advertising platforms, they have a different goal. For example, like I mentioned, in Meta and Google, they are really good at brand awareness, but this is not what AppLovin is focusing on. They focus on performance base. So once the advertiser actually started to realize that what kind of marketing strategy that they want to use to a specific target audience, AppLovin will be useful to actually cover that portion. Yeah. And then in terms of the in-ad advertising, because of the global expansion of the e-commerce in next year, I mentioned I do believe that it creates some opportunity, because to be honest, the user of AppLovin actually skew female base, so that I think this demographic also provides a certain level of opportunity for the e-commerce vertical. And then there is a question about, is app even a thing now, as in the stock price is like AI stocks? I mean, for developed market, the phone penetration definitely is saturated, but there's still a lot of potential in the developing market. So that moving forward, I actually will be expecting that in developed market, it will be really focusing on personalized ads, so that in Meta and Google presentation, I also say that this precise targeting really makes a difference, really makes differentiate whether a digital company, a digital advertising company that can win this AI race. But then I think this global expansion will definitely provide some opportunity in this developing market, because like I say, there's still a lot of there's still a lot of potential in phone penetration, so that there are still a lot of opportunity for advertisers to reach their audience as well. And then there's a questions about who are the competitors of AppLovin. The most significant that I see right now is Unity. Like I say in my presentation, is Unity and Google Ad Mode. Like I say, I mean, for Unity, despite they are not doing well in their advertising business, there is one thing about difference between Unity and AppLovin is that if the advertiser or also the developer, they want to use Unity's product, it has to be within their ecosystem. While AppLovin provides a certain level of flexibility, because they do run an ad exchange. And then regarding for the Google Ad Mode, like I say, because it runs on the waterfall process, some of the app developer do not really bring benefits from it, so that AppLovin, because they are on a real-time bidding basis, that they can maximize the value of the ad slot. Yeah. Well, let's see if there's any questions. Yeah, I think these are all the questions. I will pass the time to Iqbal. If there's any questions about AppLovin, I'll turn to answer it again. Thanks very much.
Hi, thanks. I'll take on some questions. Uh, yeah, so sorry, it's been skipping around. Uh, Hi, what is Soilbuild's market share like in precast? Um, Management didn't directly review, but my guess is about 20 to 30% because currently the precast number of precast fabs in Singapore, there's five. So I think Soilbuild's market share is about 20 to 30% because they specialize in 2D hollow core slabs. And I think there's a greater emphasis on using 2D precast products in HDB BTOs rather than I think there's less emphasis on 3D products because I think the finished goods in terms of the BTO bedrooms and toilets may not be up to expectations. So I think there's a slight shift towards 2D products, which Soilbuild focuses in. Yeah. Ben, your comments on any news that could impact WeHer price downtrend. Yeah, so I went to search and I don't find any new news that came out recently for WeHer. But my guess is that over the past few days only, the price slightly traded down because of people taking profit. Yeah, there's no news. Um, uh, Over the past 3 months and year to date, the share price is still up quite a lot. Yeah. Centurion, your views on why its price weakness is router TB estimate. I think you're asking about our target price. Does it still remain? Yeah, I think there's some questions on Centurion also. For example, why Centurion down so much? Did the REIT cannibalize it? And is Centurion a good bargain hunt now after the price crash? Any change in fundamentals? Yeah, so I'll just answer all these questions together. Uh, but currently Centurion was down the past week. And we believe that because after the REIT spin-off on 25th September itself, there may be some selling of the parent group share price and buying of the REIT itself. Yeah, so people may be chasing the worker dormitory assets that are being spun off. Yeah, but I think overall for the parent company, there are few factors that are supporting the share price now. So firstly they will give out the dividend in specie. We estimate that to be about a 7.5% yield to shareholders, which means that shareholders can also invest in the REIT itself through investing in the parent company. Yeah, because they will give out the REIT units itself. Secondly, Centurion still continues to hold 45%. So after it give out the 45% of the REIT itself. So after it give out the special dividend in specie, they will continue to hold about 35 to 40% of the stake in the REIT itself. So that will support the Centurion parent company's bottom line because the profits from the REIT itself 30 to 35 to 40% will still go to the parent company. So that will support the bottom line. And my view on why I'm still positive on Centurion is because the Centurion parent company's management still remains the same. Even after they spun off the REIT itself, the REIT management has a new set of management, whereas the parent company, the management still remains the same. So with the stronger balance sheet from the REIT spin-off itself, I believe that Centurion's management, based on its very strong track record of finding bargain hunts on properties at a very early stage. For example, the student accommodations in UK, student accommodations in Australia. I do believe that with this stronger balance sheet, they are able to find new opportunities going forward. I think they my guess is they may be able to make some announcements over the next few months regarding their additional pipeline in student accommodations. Yeah. So I currently I'm still positive on Centurion and my TP remains at T 2.01. Yeah, hope that answers the questions. What's the positive and negative for Centurion REIT? Is it a buy at current price? I think I will answer it from the asset point of view. Because I cover the assets itself previously, the Centurion parent company. Yeah, so some of the positive for buying Centurion REIT is that they hold very quality worker accommodation assets in Singapore. Currently, we do think that because of the large construction projects coming up, the demand dynamics for worker accommodations is still very healthy. There's still a very strong demand for workers. And as well as for student accommodation in Australia and UK, there's still a shortage of student beds in those two countries. So Centurion is able to achieve positive rental revisions and also very high occupancy rate of above 90% in the student accommodation assets. So that is the positive for the REIT itself. Maybe on the negative side, I would say there's more concentration in terms of it's not really a negative, it's just a risk factor because there's a lot of concentration in worker accommodation assets. So if something like COVID happens, then the more concentrated allocation in worker dormitory may take a hit. Yeah, but I think even if something like COVID happens, all the stocks will be impacted. So it's not just Centurion. Yeah, so it's not really like a negative. Yeah. Hope that gives some insights. Thanks. Some more questions. Is NVIDIA core with OpenAI and infinite money loop? Yeah, I think there's some risk factors in terms of vendor financing because NVIDIA is paying OpenAI like $100 billion investments. And I think it's rumored that they may get some equity stake, but that one is not confirmed yet. Yeah, so after which the agreement was that OpenAI will purchase NVIDIA's chips after it built up its infrastructure. Yeah, so there's some vendor financing involved. However, I think we should focus more on the positive side, which means that because OpenAI is the first mover in terms of this AI large language model, I think ChatGPT provides a very good use case to businesses in terms of reducing their costs. So I think going forward, this NVIDIA OpenAI deal, I think we should see more from it as a positive for NVIDIA because there is strong demand for NVIDIA's GPU chips in terms of the latest large language AI model. And yeah, so I think whether or not it will become an infinite money loop, which will present risk to shareholder, that one remains to be seen. Currently, hyperscalers capex investment is still accelerating, and we do see very strong demand from sovereign countries for all these AI models as well. So I do think that the demand dynamics for NVIDIA still remains healthy. Yeah. How will AMD be impacted for NVIDIA's investments in Intel? Yeah, I do think that there may be some risk for AMD, because Intel and NVIDIA announced that NVIDIA's $5 billion investment into Intel will be for their GPU chips to be integrated into Intel's PC chips. So previously, Intel has been losing some market share to AMD. I think over the past 3 years, Intel has lost about 10% market share in PC CPU chips to AMD. Yeah, so AMD currently has about 30% market share in PC CPU chips. I think going forward, with NVIDIA's GPU chips being integrated into Intel's PC chips itself, it presents some risk to AMD. But I think based on AMD's track record, their PC CPU chips has been industry leading, and they are able to take market share away from Intel. So for Intel to take back market share away from AMD itself, I feel that it will still take some time, at least 2-3 quarters, in order for the for the design to be come out in order for people's sentiments to change to go back towards Intel. Yeah, so for now, I feel that AMD, it remains to be seen whether how the market share will change. Yeah, but I'm still positive for AMD. Let me see. Has Intel turned around? Operationally, they haven't, because they have just completed their layoffs. They reduced their management layers by about 50%. They have sold off some of their loss-making assets. So whether it has turned around, I think there are some news about them turning around. For example, Nvidia's investments into Intel, and also feel like yeah, I think that is the most crucial announcement is Nvidia's investments in Intel itself. Because Intel is able to integrate its CPU chips into Nvidia's GPU rack itself, and Nvidia will also put their GPU chips into Intel's PC chips itself. Yeah, so that is the biggest announcement recently for Intel, for them to turn around, I feel. But this is at a very early stage. We do need to see operationally how it will be executed. Yeah, so it remains to be seen. Yeah. So there's a two-part question here. The first part is for Paul. How to comment the new IH? Yeah, so I'll leave this question here, but I'll answer the second part. Soilbuild Construction is not in the above index. Yeah, so why is it? Yeah, so I think there's some criteria to be in the index. Firstly, it needs to be about at least 100 million market cap. So that for that part, Soilbuild satisfy that criteria. But I think there's two other criteria. Firstly is the free float wise. I think it has to be at least 15% free float. But Soilbuild has only about 10%. So that one doesn't hit the criteria. Another thing is also about trading liquidity. I think it's reported that they are looking at least 100,000 daily turnover over the past 6 months. But Soilbuild's liquidity has been recovering over the past 3 months. But I think at the start of this year itself, their liquidity has been very thin. So I think that is why it is not included in the index. Yeah. How will the US one-to-one chip production rule affect semicon stocks? Nvidia, AMD, TSMC, Broadcom. Yeah. So the US recently came out with this last week. So this production sort of one-to-one production chip production rule is for semiconductor makers to produce in a volume in US such that it matches the volume of chips that their customers import from overseas. Yeah, so overall this rule is to spur US manufacturing for semiconductors. How will this production affect semicon stocks? I think firstly, there's a risk that because of this push to US manufacturing, there may be a risk that semiconductor stocks may be affected in terms of their margins, because US may not be the most ideal for semiconductor production. So their net margins may be impacted as a result. Secondly, semiconductor companies may need to put in more capex in order to set up all these production plants within the US itself. I think TSMC has been setting up some capex for their Arizona fab in US, for example. Yeah, so this is some of the dynamics which may play out. However, this chip production rule is still at a very early stage. So we do need to see whether it will be passed down and how seriously it will be implemented. Yeah. What is the PE and price to book value at current price for Central REIT? PE and price to book. Yeah, so sorry, I haven't done the analysis for the PE and price to book. But for the REIT itself, but for the parent company itself, previously the price to book was at about 1.2. Yeah, so they spin off I think about half of their assets to the REIT itself. Yeah. So that is about quite fairly valued because it is quite comparable to the other companies, slightly at the premium side. Yeah. Hope that gives some insights. Yeah. Okay, I think last question for now. How will the tech sector in Singapore be affected by US tariff on semiconductor? Yeah, so for Singapore tech sector, it is mainly referring to the component manufacturers. For example, Franken, AEM, UMS. So how will it be affected by US? There may be a shift towards US manufacturing from the consumer, from the end user side. So I feel that some of the beneficiaries for this may be micromechanics because they have a larger emphasis on providing for US semicon equipment makers within US soil itself. But however, in terms of tariff impact, I don't think it will be very material because for example, for Franken itself, they only have a 9% exposure to direct export to US. And for the other of their products, when they export to Asian countries, for example, Applied Material, when they operate in Malaysia itself. So sorry, what I was going to say is that when Franken export this to Malaysia itself, the products are being used in Applied Materials markets in Malaysia itself. So whether or not Applied Material will ship the finished good to US itself, that tariff impact will be borne by Applied Materials themselves. So it wouldn't be borne by the Franken and also IPFUMS as well. Yeah, so it wouldn't be that materially affected by US tariffs. Yeah, hope that answers your question. Thanks. I'll hand over the time to my other colleagues. Thanks.
Yeah, thanks, Iban. So let me just move on not exactly a question, but hope you can consider covering tech stocks listed on Hong Kong Stock Exchange, like how you do for US ones. Otherwise, we'll be missing out on the hottest and hottest and fastest growing market in Asia. We don't cover Hong Kong mainly because we have our own Hong Kong research team. Yeah. Hottest and fastest, yeah. Probably the hottest one is the next question, which is what are your views on Atlantic Navigation and IX Biopharma? Yeah, I think if you want to talk about hot, then probably these are the two hottest stock. I think Atlantic is up 90% today, if I'm not mistaken. Yeah, and IX Biopharma is up. IX Biopharma is up 3 times in the last 1 week. So probably you got the wrong hot market. So for Paul, what are your views on Atlantic Navigation? There's any new, as you know, they sold out the business. So I think they were trading below cash. So now we're just probably trading back up to cash and it's profitable company based on existing assets. I don't have much there. For IX Biopharma, why the stock triple? There's no news, of course, but my only guess is that for any such big move, they need to get something like an out licensing contract. So if you recall, a few years ago, they actually did get the out licensing. So out licensing means that there was a US biotech company called Celos that actually out license. That means they buy their technology, fund their R&D for the next few years, and then later on, they will share any revenue or profits with IX Biopharma. So this is the type of deal which I will look at if they were to make any announcement. Or I'm not sure what they're going to announce, but there must be something brewing otherwise. But the interesting thing nowadays is that you don't get QREIT by SGX so much. Even though Atlantic share price actually doubled in 1 day. Yeah. So I think maybe the hot market is not in the earlier question. What's the outlook and target price of Wilmar with the recent news on the penalty? Yeah, the penalty is $700 million US. we don't have a target price on Wilmar, we don't cover, but this is not the only outstanding issue they have. So there is another, there's of course still the land case, and there is still another case. Sorry, I missed the other one, but there is still two more outstanding cases on them. There is still the plantation land that could be forfeited or penalty on Wilmar. So on top of the weak environment they're facing in China, I think for now probably just stay back, take a step back on Wilmar, because you're not sure how far this type of court cases will go. I mean, who knows if tomorrow there could pop up another litigation case on them. So I really don't know. Keppel price has been moving up lately. Your comments out. We still like Keppel. Our view is just that they are good. This is those kind of stock where operationally it is growing. So we still think, like we highlighted before, they're going to grow from the new office building in Keppel South Bay. There's also a new power plant coming up next year, and the submarine cables have been completed, so they will get maintenance income from that. On top of that, then they are also doing share buyback 500 million, and any once in a while they will announce some monetization. They got 14 billion of assets they look to sell, and this is before the M1. This is excluding M1. So there's news flow and there's operational growth, and then when all this thing ends, they will hopefully build that strong asset management business. So that's why the trajectory is strong. What news could happen this quarter is that I think the government is due to announce new data centers. I have no idea whether this is the one affecting the share price. I have totally no idea, but if that happens, then it's positive for the power supply market, and also it's positive if whoever can win a data center license to build a data center in Singapore. Yeah, I hope that helps. But for me, we focus a lot on direction of the share price, not like day-to-day movement. But directionally, we think there's a lot of positive news coming. Okay, this I'm not sure. 100% tariffs on the patented on the pharma. Yeah, which counters to claim? Yeah, this one. Sorry, we don't have any covering pharmaceutical. So apologies. Yeah, we do focus mainly on technology, so not on pharma, because that's very technical, because you're talking about drug discovery, active ingredients. So that part we don't have an analyst. Unless we know someone who got some pharmaceutical background. So that's why we usually don't touch the pharma industry. Okay, prime US REIT potential dividend value trap with price sinking further. We don't think so. I think we are still positive on prime US REIT. There probably is a bit of overhang after the rights issue. After the placement. But we are still positive. I think like we said, after 7 years of decline, I think the occupancy has started to increase. And there's virtually no supply in office market, or the supply is down. I don't know, like what was written earlier, about 80% down. So we are still positive on those fronts, that you can get the benefit of growing dividends as the occupancy rise, and also and cash flow improves, and you also get the benefit of the narrowing of their discount. And of course, interest rates in the US also dropping. So we think the outlook for them is positive for prime US REIT. Yeah. Paul, where can I find the market call price for Geo? Yeah. Also, what I use is the McCloskey 4,200 agar. The price actually you can go to the SGX. So the SGX under the derivative section. But that particular coal is actually traded on the SGX futures market. It's not easy to trade, SGX website is not the most user friendly, but you can get the pricing there. Just that you got to go under their commodities tab and then go under coal and then look for it there. Yeah. But again, I mean, they don't make it easy for people to find the price chart. Yeah. Can update on Wilmar impact on penalty? Yeah. Also CEO buyback. Yeah, I think yeah. Of course, the CEO buyback is a good sign, but he has been buying back since $4 or $4 plus. So any update on Singtel, Sembcorp, and Seasings? So on Singtel, I think there's a few questions on Singtel. Of course, this is a tragedy. What happened is that the 000, which is like the help or ambulance dial in help like the like 999 but this is the 000 help that didn't go through. The last time Telstra, which is the Singtel equivalent in Australia, had that, their penalty was about 3 million. So actually in the Australia, they actually have a formula like how many breaches. So for Telstra, they are like 480 breaches. I think for Optus, it could be 600 or more. But of course, the penalty can be higher. So for us, we although it's a tragedy that a few people lost their lives, but for us, we think it's an opportunity to buy, because I think Optus from the sum of parts is probably 10-15% of our whole valuation. Of course, the headlines is poor, but you usually find opportunities when the headlines are poor. It's probably going to be a fine. They already paid 100 million fine on another case of mis-selling. So they probably, assuming even if they put $100 million provision, I think the market or even analysts or investors will probably see this as a one-off, hopefully. Yeah, but of course there'll be a lot of negative headlines. What you worry is that the politicians take this and make it worse as well. Yeah. And of course, a lot of sensationalization. I mean, not to put down this event. I mean, it's definitely negative, a tragedy, of course. For Sembcorp, one thing is that it's a bit the data coming out from the electricity market is quite weak recently. So I think that's the one negative that's coming up for Sembcorp. Yeah. For Xixing, we still like it. It's still trading even after it moved up recently, 6 times PE and half the market cap is cash. And the results will be coming up. So I think the results should be strong. So that's the latest update. Any chance Pacific Radiance get contracts or updates like Marco Polo? Share price have been running. Yeah. One thing that might have happened is that Pacific Radiance, I think 2 weeks ago or maybe last week, I'm not sure the exact date, they did do a road. They did invite fund managers to their yard in Singapore, so maybe, and did a briefing. So maybe fund managers there got a bit more positive on the stock after listening to that. In terms of contracts, I think they could. It's about how much whether they want to invest in new OSVs. So if they do that, then they'll be good. But it's trading maybe because the share price has beat our target price today, so probably about 11 times PE, which is not too high considering most of the contracts are secured. So we still positive, but I mean our target price was 10 cents, and I mean when we initiated it was 4 cents or 3 point something cent. Yeah, so I mean it's already tripled, but I think in this kind of environment, there's still upside because I think they could actually get some vessels like you said, a Marco Polo exactly, because the environment for OSV, which is offshore support vessels, is still positive. Yeah. Okay. Sorry. Uni Asia, the result met expectations. We don't have coverage, but I think the good thing is that the dry bulk is recovering. So I couldn't attend the briefing because I had to attend. Because we have this webinar is actually happening. Just ended, I think. What has TeleChoice to do with U Mobile? Yeah. Okay. So what they do is they call it 4PL. So basically, U Mobile has outsourced all their handphone needs to TeleChoice. So what TeleChoice will do is they will, let's say there's an Apple, the new iPhone 17. So TeleChoice will decide on the quantity, the color, the value. It will be in their books, the inventory, and then they will distribute it to all the U Mobile shops to their subscribers. And then they won't make a margin on the phone, but they will charge a fee for, there's a formula, that one they can't disclose, it's confidential, but there's a fee for doing all this branding, spare housing, servicing, after sales service, delivery, and so forth. So that's what they do. You can just think of them of handling all of U Mobile handset needs, from financing it, from delivery to servicing to ordering. Yeah. Singtel still maintain after Optus. We are still positive. I mean, it's a tragedy, of course, but we think this is an opportunity to buy because the biggest driver to Singtel share price is actually Bharti India. So that has not changed. China Aviation has dropped from high of 142. Any news? We don't see any news. I think the only data point we can get is the travel overseas, overseas travel by Chinese. Of course, it's not at a high, if 30-40%, but it's still growing at mid-teens, although slower growth. Yeah, I think no real news. But of course, the share price has rallied. I think 50% the last 2-3 months. Is buying stocks in the SGX Next 50 index a good bet? Okay, so there are a few things here. So just remember that this Singapore Next 50 index is like, I wouldn't say a clueless investor, but it's just an investor that buy whoever's the biggest and the most liquid. I just buy the stock or it's part of my index. Whether is it a good bet? Of course, there is only one metric. That means is size alone can, unless you believe size alone can move the share price, which can, provided the second part. So what you need is passive funds. So you need ETFs, you need okay, so what could happen, which we think will happen, is that the next batch of EQDP money coming out, which could even happen in October. As you know, EQDP is 5 billion, 1.1 given out. So there could be another 3.9. So some of these 3.9 could actually be indexed to this next 50. My own view, why do this type of next in 50 for who nobody uses? So if that is indexed, then there will be some flows into all this, because most fund managers will probably use this next index as the universe, what to buy. But you know, this next index, half of it is almost REITs. But I think it is a good universe, but I will also look for those that are going into the index. So there's also an eligible list. To me, that eligible list actually look more interesting because these are faster growing companies. In that list was AEM, Q&M, Alltech, Tuansing, LHN, Valuetronics. So I thought those were faster growing. Like the one that we have, they also include Aztec, which you know the earnings dropped 50%, but anyway, it's the biggest. So I think the eligible list is something, but it's definitely a good start. I think all fund managers will 100%, I think my own view, look at this and comb through this list of stocks and the eligible stocks before they decide what to buy, because it's basically the most liquid stocks. I mean, you will usually start that. Yeah. Sorry, it's a very long answer. Yeah. Helena. Yeah, Helena is not she's on leave today. Yeah. What's the outlook for STI for the rest of 2025? Yeah, we don't give a STI target price because the FTSE, if we use the word STI, the FTSE want to charge us money. Yeah, so we don't give her, but I think another 15-20% upside is possible, because all you have to do is just push the valuations from 15 times to the one standard deviation higher, which is about 18 times. Yeah, then you get the target price. TeleChoice seems pretty illiquid with low trading volume. Is it a good buy as the share price may not move much? What are some of the possible catalysts move forward? Yeah, I think I totally agree with all the comments. It's low liquidity, it's high risk. That is definitely true. I mean, so this stock is definitely not for everyone, which is understandable. So I totally agree. But that's why when we initiate coverage on these low liquid ones, like we did, Soilbuild, Everglory, and even this one, as a research house, I think we have to be pretty sure, that there is upside on the stock. Otherwise, we won't dare to do it. Because we're gonna get complaints like every week. Someone will be complaining to us. So that's the only thing. We have to be pretty sure on the outlook of this stock. Once the liquidity is poor, so we will actually do a bit. It'll be harder for us to consider covering. If the liquidity is thin, which, like you say, is rightly true, and the bid-ask spread is so high, why do this? So unless we think there are many more layers to this company. Can you elaborate on TeleChoice's ability to generate positive free cash flow, and how does it affect? Yes, so TeleChoice is an asset light, so they don't have much capex because this is very heavy on working capital. So you need a lot of working capital to buy the phones. Of course, of course, it is to you mobile, so there's not much trade debtor risk. So they have been free cash flow negative the last 1-2 years. So we think moving forward, they will slowly be turned more free cash flow positive because they turn profitable. So the last 3 years they were, the last 4 years they were loss making. So that was even worse because although the free cash flow may not be so steep, but they were loss making. So because they are turning profitable, then the free cash flow will be better. What's your take on Yang Zhejiang order cancellation? Is it a buy or knee jerk? Yeah, I think the order cancellation is not just the order cancellation. I think the more worrying thing for me is the container rates are still dropping. So I think they dropped like 40% this year. So if container rates keep dropping, who's going to order vessels? Of course, there is some green vessels they will order, but it's just going to put pressure on then sustaining the order book. So always remember this kind of stock is not about the results, it's about the order book. Most important is the order book, and the order book has slowed tremendously. Yeah, I just slipped my mind what's the numbers, but I think they're guiding it down to 3 to 4 billion. Yeah, which is I think more than 50% down from last year. For how to comment the new IHSG Next 50 index? Yeah, I think yeah. Thanks for the question. So I think I mentioned it earlier. It is. I think if you're looking for the the EQDP list, this is virtually the EQDP list. All fund managers will probably will look at this before they decide, because this is the most liquid stocks. Before they go more exotic, if you know what I mean, they probably look at this whole universe and from here try to pick stocks from here before you try to do something more esoteric or more exotic. So it is a benefit. You can look at this stock and consider what you want to buy. But don't forget the eligible list. I mean, yeah, I thought those are more interesting. What the key risks investors should consider with TeleChoice, including regulatory change or competitive pressure? Yeah, I think the key risks will be U Mobile, because now U Mobile will be the biggest, their biggest customer. And but U Mobile could be coming off from IPO next year. So if that happens, then that will be a positive. And the key risk is that you see the trading liquidity. I mean, it's so illiquid, right? Yeah. And I think for me, U Mobile is the biggest risk. Balance sheet risk, I'm not too worried because it's a ST Telemedia, technically a Temasek held company. How does TeleChoice manage its debt levels and what's the impact? Yeah, I think I hope I answered that. But thanks for the question. Will the US government shutdown, how will it impact the market since it's near all-time high? Okay, the first shutdown in end 2018 that lasted 30 days, I think that one the market took negatively. But in that shutdown in December 2018, the impact to US GDP when they did the study was about $3 billion US dollar. That's like 0.1% of the US GDP, hardly anything. So the impact is because the US government shut down the parks, museums. Of course, these are nice places to go, but then the impact to the US government is not large. Of course, there'll be payrolls delayed, but then the government will pay you back anyway. So it's mainly the lost revenue for the government. The last count for that 30 days was 3 billion. So the impact is minimal, I mean, unless you go like 6 months or 7 months, then I think the market will start to price that. So I think it's a non-event because every year we hear of this. Venture share price has been up after the dividend distribution. Any specific reason you want to comment on? Actually, I think the valuations and the dividend yield is what is attracting investors. But actually, the pharma news that you saw, the recent imposition of duties, tariffs are 100% tariffs on pharmaceutical imports. That to me is actually negative for some of the contract manufacturers. Like venture, pharmaceutical customers are their customers, and when you have this type of noise, the pharma companies will cut back on their capex and relook at their whole supply chain footprint. So I think this is indirectly negative for venture, and of course the other one, Vic Plus, which is another major medical equipment. So the tariffs we think is actually negative for them. Yeah. So yeah, so that's why I probably the only one who has a hold. Everyone has a buy, and some of the only most negative analysts on venture, because I don't think the results can recover. But anyway, obviously I'm wrong. I mean the share price is up, right? But fundamentally we still think earnings is going to be weak. Hi Paul, why Zhang Financial suddenly dropped? Any info? Okay, I don't have any info, but as you know, they are doing a road show to do an IPO. So usually the share price can actually react when the marketing of their IPO isn't good or is very good. So that's something to monitor. I don't have any inside news or details, but if maybe they've been sounding up their IPO to some investors and that hasn't done well. I'm not sure if that's one reason. I'm just speculating here. 99.9% guesswork here. But if the IPO is not the take-up rate by cornerstone investors and all that not positive, it can actually affect the share price. Yeah. Does creating more indices lift share price? It does if people put money in. Yeah. So one of the reasons, like some of the REITs that are on the index, you notice when they do placement, the share price can go up. That's because a lot of market makers, hedge funds will take up the shares because they're in the index. Once you're in the index, you issue new shares, then people have to participate. A lot of passive funds have to participate. So let's say you're 1% of the index, then you do one big rights issue, then your market cap double to 1%. Everybody will have to buy in because they need to have that 2% in the index. Because you cannot have tracking error. You cannot deviate too much from the index. So being an index, if there's money invested in it, there's a captive bias. People have to buy your share because you're in the index. Yeah, and it will lift share price because there's money coming in. Is the Optus issue dragging down Singtel share price? Yeah, I think it definitely is. I mean, yeah, you got one outage 2 weeks ago, then now you have another outage. Then of course people are going to extrapolate. They're going to have an outage every week. Yeah, I guess. What's the dividend policy for TeleChoice? So TeleChoice don't have a fixed one, but in the past, I think they've been paying dividends. They're listed probably 20 years. They paid dividends maybe 17 or 18 years. Sometimes the payout ratio can be as high as 80%, but they don't have a fixed one. So they will pay dividend once I think the earnings are stabilized. Okay, yeah, the problem with TeleChoice is quite illiquid. Anything bad happen can't really slip it away fast. Yeah, you're totally right. Yeah, line share insiders. Yeah, ST Telemedia owns about 51%. Then there's another big shareholder there, about 18%. They've been there for many years. But I agree with you. I mean, there's no pushback. This is the risk. I mean, the liquidity. How the US, not much impact on pharma stocks listed here, right? Yeah, because there isn't I don't think there's any pharma stock like those really that export to the US. Like we mentioned, the indirect impact on the tariffs will be on those contract manufacturers that service the pharmaceutical industry. Yeah, okay, I think I better leave it here and then hand it over to Zane. Sorry, I took up his time. Yeah, thanks.
Thanks, Paul. I'll move on to some of the TA questions. Yeah, let me just share my screen right now. Okay, I see. First one, I see a question. Historically, September is a bearish month, but it looks like it may not happen. What's the possibility in October? Yeah, so far September is still positive, likely to end the green since we're just quite close to the month end. Possibility in October, I think there might be a chance of it being the rate, but then I think we shouldn't be too fixated on that. I think most importantly, the trend is we're still in the uptrend, and then I think more importantly, what I will look at is whether the index still respects the 30-day MA, which is this yellow line in the chart, which we see that price has been finding that as a key support level ever since end of June. Yeah, and then if you go to the weekly chart as well, price has been remaining on at least the 5 and the 10 MA levels as well. So I think that will be the important ones to look at. Yeah. So as long as price maintain above that, I think should be still okay. Yeah, occasionally there might be still some slight pullbacks along the way, but so far we have seen rebounds from such pullbacks. Yeah, and if you're curious for October wise, in the first year, in terms of seasonality, the first year of a presidential cycle, on average, October is slightly down, 0.9% on average. Yeah. Okay, I'll move on to some of the individual counters. So first one is Sheng Siong. Yeah, so I think for Sheng Siong, looks like it's still quite sideways. Still quite sideways for now. In terms of chart price, since it broke out this downwards resistance line around 207, it went to retest the resistance area around 210 instead of 250. Currently, we are seeing a bit of a pullback. I should be still holding up in the range. I think, yeah. And the weekly chart, still holding support at the 5 and the 10 MA levels, currently around 207, 208. So I think as long as this level holds, we should be able to still see some range bound action for now. Yeah. Then next one is on SIA. Yeah, for SIA, I think there's still some weakness. Price since the breakdown of this 655 support still holding as a resistance, and then we are still seeing price gradually trending lower since end of August, lower highs and lower lows. And back to retesting this horizontal support level around 648. So for now, it looks like still a bit of a sideways, but I think it still looks a bit weak with price still finding resistance. I think from the 20 MA level right now, which is around 653, and then also support turning resistance at 655. Yeah, on the weekly chart, still below the 5 MA level and as well as the 10 MA level as well. So I think we might see some continued weakness if it breaks below the 648 again. Yeah. So for now, it's not much strength in SIA. The next support level below 640, I think will be around 638. Next one is Zixing. Yeah, so Zixing, I think finally the price managed to move upwards. So it went back to retest the swing high over here, close to 0.035, 0.36 start of last week, and then there was some pullback. Anyway, I think for now we should see some sideways consolidation, but I think support should be able to hold around 0.033, this previous resistance above this range resistance previously, and currently is a 10-day MA as well. So hopefully can hold around here and afterwards do a rebound to test the swing high around 0.037. Yeah. So for now, hopefully best I think it will be to see whether a higher low range forms over here at this previous resistance of 0.035. Then if I hold a higher low, then there could be some chance for some further upside. Next one is WeHe. Yeah, so I think for WeHe, some pullback recently, but it still looks okay. Short term wise, some pullback towards the horizontal level around 71 cents level. And for now, so it needs to, for now, for the strength to come back, I think it needs to try to break over 74 cents, which is currently this bit of a horizontal resistance over here as well as the 20 MA level. On the weekly, it did a retest of the 10 MA, currently around 71 cents. So it could be some slight rebound over here. Then around 73 cents, 74 cents, some resistance from the weekly 5 MA as well as the horizontal level and the daily 20 MA level. So most possibly for now, maybe some sideways action for now. Next question, top market. Yeah, so for POMA, I think there's some the price actually did a bit of a breakdown recently. In terms of weekly, previously during the rally, we've seen price actually holding well above the 5 and 10 MA levels. Then recently I think there was they couldn't hold at around 283 level, and there was a breakout and didn't hold as support. Afterwards back down and price below the 5 and 10 day on the week, 5 and 10 MAs on the weekly. On daily, is still seeing a bit of a sideways for now, around 253. On the sideways around 253, and I think for now we might see some sideways between 253 to 280 with some resistance. the recent swing high as well as the breakdown level. Yeah, then the next key support below, I think that should hold the price around 235, which was previously here during the dips previously. So for now, I think a bit of weakness, but could maybe go a bit sideways. Next one, Singtel, I think a bit of a pullback recently. The breakdown of this range consolidation at around 428. But I think this level at around 40, the current it's quite close to the previous range resistance prior around 407, 48. So I think this level should be able to hold as support. Yeah. Next one for Franca, I think yeah, still looks quite weak. Price still it couldn't hold the attempted breakout of this 145. Yeah, and then we are seeing breakdown below this 140 level as well. And then on the weekly, you can see it's still facing resistance from the 10 MA on the weekly, and then there's a bit of a pullback. So for now, 137 20 MA on the weekly is a temporary support. Yeah, I think for now we could still see some downside, I think, towards next one, maybe around 130, 135 or 130 next. Yeah, 130 will be close to 130 will be a stronger support level. Yeah, for now there's still, I think it's still trending downwards. Okay, next one for Century, I think yeah, after continuing on the weakness with the breakdown of 167 as well as 156 over here as well. So yeah, I think the next key support somewhere close to on the weekly low Bollinger Band around 135, 136. I think that will be, if it reaches there, that will be a good support. And then on the daily wise, around 130, 134, 135 as well. So there's a horizontal level over there. So I think that will be a strong support. Then in between, there's also some support around 140. And so for now, trending downwards, I think see whether there's it reaches some of these levels, then there could be some rebound. And the RSI is at the oversold level for now already, around 24.7. So after such a strong move downwards, I think if it reaches some of this support level, we could see some temporary bounce for Centurion. Next one, sets is for sets. I think sets I think is looking still quite positive. I think the upwards move since the April bottom is still intact. For now, a bit of a recent consolidation, I think is still looking okay with higher lows and breakout of this around some horizontal resistance around 332. Back to retest this swing high around 340, then doing some sideways. So I think for now, looks like a bit of a sideways, but you can hold this breakout of 332, which is currently the 10 MA level on the daily as well. Then if it forms like a flag at the resistance area over here, then subsequently break out 343, I think still quite positive to actually trend higher. I think next resistance should be around 352, which was this previous head and shoulders breakdown level. Yeah, so I think that's still looking the uptrend is still looking okay for now. Yeah, therefore SIA Engineering, I think yeah, on price managed to recover back up after some sideways along the weekly 5 and 10 MA levels. Also yeah, breaking out this 343 level. So I think for now still is showing some strength, and support should be along the 5 MA levels for now, since there's quite strong momentum. Price around moving up around 40 cents since this around 318 breakout over here. So I think for now some support will be around the 5 MA level, around 346 for now. Then it could continue to trend along there. Next one, ComfortDelGro. I think for now still nothing much. I think it's still quite sideways. Yeah, just price making a bit of a lower swing highs, but I think should be quite sideways. I think around 140 this level should be a whole spot, which was this prior range resistance near this swing low, as well as the bigger picture wise is close to around the trend line support. Yeah, so I think it should be moving a bit sideways, and if it does touch close to 140 again, I think it should be having some support over there. And for Semco Industries, yeah, I think for now, I think still not much strength. Despite it consolidating sideways at the 200 MA level, this purple line, I think hasn't been able to hold as a bit of a support, and then just this range wise also hasn't break up above this resistance around 618 and above. So still a bit of weakness. We could see some further downside for now if it breaks below this 595 level. For now, some slight weakness as it is closing below this 603, 605 area, which is the range support level. Yeah. So I think there could be some further downside if it breaks below 595 after this recent range consolidation and price haven't recovered back up above 618. Okay, next one is on Yangtze Shipbuilding. So for Yangtze Shipbuilding, I think after hitting around the 332 level, a bit of I think there's the trend, there's a bit of change in terms of the trend where previously was a smooth uptrend. Over here, finding support along the red line, which is the 10 MA on the daily. Then today to be seen the breakdown of this upward support line as well as this horizontal level. So I think we could be seeing some further pullbacks to the next support level around 305, as well as around close to 290, 294, 295 area over here. Yeah, since it's just a fresh break of this trend. Yeah, we could be seeing a retest of the weekly 10 MA as well. That's close to $3. Yeah, since today is the first week that broke down the 5 MA and the weekly as well. Yeah, so I think some short-term weakness that we could see some further levels downwards and maybe some bounce. Yeah, I think it's about close to 1. I think I'll hand over time to maybe my colleagues or Paul if any other comments. Yeah, sorry, unable to take all the TA questions. I think there's still a lot, but feel free to post all of them in our Poem Street community, then I will answer it over there. Yeah, thanks for all your questions.
Yeah, thanks, Zin. Not sure if the rest has any others too. Yeah, on Hong Kong market we don't. I think Hong Kong market possible to cover it once every 2 weeks. It's not possible weekly by a colleague. Yeah, I will call. They don't do such. I think we tried before, but they don't. Yeah, thanks for the suggestions. Yeah. Okay, I think we tried. Okay, there are some questions on Apple. Regretfully, I think Helena is on leave, so she can't answer that. Any Singapore stocks impacted by Trump pharma tariffs? No, there isn't any actually. Yeah. Sorry, I'm just trying to run through. Please comment on the REITs MLT. Yeah. Darren is also on leave, so I think we can't. Yeah. So apologize again. We can't. Any guidance on Olam? Yeah. I need to get back to you. I haven't really been updated on Olam. Yeah. Outlook on Apple. Which is the strongest REIT in the current environment with decent yields? I think for us, this is nothing new. We've always liked the foreign REITs. I think in our model portfolio, we have Escort and we also have Stonebank. Yeah, some of the other REITs also we like is Elite because we think the overseas REITs give a better yield and we think they can return to growth. I think by the return to dividend growth by next year. These are like Stoneware, Elite REIT. Yeah. Which do you like better for for growth and health? SIA Engineering or ST Engineering? Probably ST Engineering because ST Engineering has that the defense spending above. Because ST Engineering now is trading at 30 times PE. Yeah. Mr. Kwok Kun Hon has been buying Vilma shares, saying it's a good time to pick up the share now. Confident with it. Yeah, do you believe him? Yeah, I mean when the insiders buy, of course, it's always something positive, especially if they consistently buy. I think if they buy a bit, then I'm not sure if it's called advertising. But if they consistently buy, then you know they really believe there's a lot of value at these levels. It's the quantum of what they buy rather than, I mean, buy one lot is also still buying. So yeah, it's like advertising cost. Yeah. Okay, as coal price has been trending downtrend, how will Geo be affected? Yeah, so the coal price has been down, I think like 20% year on year. But what has helped them still grow their earnings is because their volumes are grown like 40-50%. So that's what helping the production has grown, I think at least 50%. Yeah, just yeah. Will Wilma recover soon? Unlikely in the near term, because China is also not turning around, which is the other big market for them. Although palm oil prices are higher, but people just buy direct, like First Resources. Why do you want to get bogged down in all these penalties and also weak Chinese consumer spending? Since you can just buy a pure palm oil company. Yeah. Okay, I think that's as many as we can answer is one. So thanks everyone for your time. I hope it was useful. And no, do feel free to dial into our Singapore strategy this Saturday if you have time, of course. Yeah, thank you everybody, and have a good week ahead. Thanks everyone for your time.